Hello, everyone. Marty Chera here from Express Capital Financing. We're hard money lenders. Got my son, Max Chera here. And we got Mahir Allan. Purpose of this conversation, the webinar is just for everybody to feel comfortable learning how to invest, what to expect now for 2021 to get into the real estate industry, whether you're a newbie, savvy investor. We brought on here an expert that's been around since 2014. So that's about 7 years starting out doing note buying, doing flipping, and maybe some buy and holds. And we're just here to discuss, how to get started, how to acclimate, how to still continue building up your portfolio in real estate. Now, unfortunately, is the best time to be in real estate where there's uncertainty. There's a lot of opportunities to be made, and millionaires are made in a recession. So, folks out there that are in it or are looking to get started, not to be intimidated, not to be fearful. And Mahir Allen is going to give you his expertise, advice, and knowledge. As always, please, folks, speak to your CPA, speak to your attorneys for that professional advice. This is only for informational purposes, and we'll get started. So, Mahir Allen, go ahead. You got the floor.
All right, I appreciate that. So, Marty factors in somewhere in the middle of the story. We'll get into it. So I used to, I graduated college with a bachelor's degree in business, 2009. So I'm a little older than my face looks. I didn't know what I was gonna do. So I got into banking. I was a teller. I was to become a banker. And I remember being a banker, I was working in Midtown Manhattan by the United Nations. My commute was at like an hour and 50 minutes. I had to, the branch was so slow. Like, branches are really slow right now, but if you go back a few years, everyone used to come to the teller window to do their transaction. There was no ATM deposits, no mobile deposits in like 2011, that time period. And I went from a branch where I was doing as a teller like 200 transactions by myself, and we had 4 or 5 people on the window, to a branch that would do 200 in an entire day. So no one was walking into the bank. And I had to go business to business to go open up accounts. I remember walking into the Gap, into Walgreens, anyone that had like a business banking relationship with Citibank, and that's where I used to work. I used to go to the employees while they were working, ask them if they had an account, they want a credit card, something like that, just to draw up business. So I was doing that for about 9 months, and I realized I hate this. Hour and 50-minute commute each way. And I told this story, called my friend Sal. My friend Sal was working at Chase at the time. I walk into like CVS or something, like around the block in Grand Central. It had air conditioning. It was 90-something degrees. I'm wearing a suit. And I just remember walking up and down the aisle saying, I had enough. I'm not doing this anymore. I put in my 2 weeks. I left. And I didn't know what I was going to do.
So you just put in 2 weeks and said I'm out.
Yeah, I didn't have a backup plan. Now I don't have a wife. I don't have any kids, so maybe that makes things easier. But I knew I was unhappy. I was traveling almost 4 hours a day, and I was making like, I think at that time I was making like 35,000. That was like the salary, and then if you make commissions or whatever. I don't know. I was like, that's not what I envisioned for myself. I'm like, this is what I'm going to do for like 30, 40 years. Like, travel 4 hours a day, come home miserable. I came home like 7, 8 o'clock at night. Like, so I quit. And I didn't have a lot of money. I probably didn't have any savings. And it took me a little bit. I tried a couple of different things. I tried like multi-level marketing, right? Or you try and sell the energy products. I tried that. That didn't work. I tried being a mortgage broker, officer, whatever, like for a small company. They were all very corrupt. They didn't want me to close any deals, so they would kill my deals. So that didn't work out. And then I'm like, you know what? I got to get out of this sales thing, because I'm not a salesperson. And I started interning at this, it was called a hedge fund. It wasn't anything at the time. I was like the first person they hired, and I worked there for free. So like, I think I quit in like September, maybe of 2012 or 2011 or something like that. And I think I don't think I started working again until like May or April as an intern. So I did have a long period of time I was making no money. And then I worked as an intern for about 2 months, no money. And then I started working part-time there, and then I became full-time. But the reason I say all that is because I realize I'm not a salesperson. I'm like, give me something to solve and let me work on it. Like, that's my thing. And when I was working for this hedge fund, that's what we learned. It was for distressed mortgages. We were buying bad debt from the banks, and we had problems to solve. And if you gave effort, you would see a reward. I didn't have to sell anybody to keep their home, because we were calling people trying to make deals for people to stay in their homes. And that'd be by lowering the interest rate or extending the terms out, dropping late fees or something. So it wasn't like a forced sale, right? It was something that they wanted. They wanted to keep their home. 2014, I was in that space I was in that hedge fund for about a year and a half, 2 years. 2014, I started working on my own. Now, right before that, and this is another thing that comes up with people when they first get started, is they don't know how to get the funds together. They think it's so overwhelming. I did a test run while I was still working at the hedge fund, and I brought my friends out to dinner. And I said, listen, I brought 10 people out. And I said, listen, I'm doing this note business. I feel really good about it, but I need money to do a test run. I need to really test to see, with real money, you could see how much you really know the topic. And I closed 9 of the 10 people, and I raised $5,000 a person. And we opened up a company. Everyone put the money in. It was $45,000. It wasn't a lot of money, but it was good enough to get started. And then I did a couple of deals and turned the 45 into 63 in 9 months. Cashed out, paid everybody off.
Doing the flip?
It was, I bought 3 notes. So one note, it was a discounted payoff. One note turned into a modification, which we sold as a performing note. So we got more money for that. And one note, it was just a note sale. We bought it for cheaper. We sold it for a little bit more. So it's kind of like a wholesale. So if you were to compare it to real estate, one was like a turnkey rental, one was a wholesale, one was a flip.
And that's the interesting thing is like all these businesses, they all have the same relationships, whether you're buying stocks or real estate. Like you have dividends, which is like your cash flowing properties, which is, and then you have your non-performing converting to performing, which is your flips for anyone who's kind of doesn't understand the note side of things.
Yeah. So look, what did everyone get rich off that? No, but you turn your 45 into 63. I think everyone made probably about 1,800 to 2,000 on their money, something like that. It's pretty good return in less than a year. And for me, that's what gave me the confidence to say, all right, I know what I can identify what a good asset is, and I can turn it into a better asset, right? To turn into something. And so in 2014, I was doing the note business till about 2016, a little longer, 2017-ish, 2018 even. I was still pretty active. But what that dinner taught me to do was I had to raise money. In the note business, there are no lenders. So every deal is a cash deal. In the note space, I raised over $15 million on note transactions. We purchased over $70 million in debt. And
how long did it take you to get to a point where you were able to collect more than, let's just say, $10,000 a person?
It was pretty quick. It was pretty quick, actually. So I left. I started my company about July 2014. By the end of 2014 in December, we closed a trade that was for $2 million. And I raised that from 3 people. Myself, we raised capital through family and friends. And then I raised it from 2 people. One who was like a previous client from the hedge fund. They put in about 900 grand. And then the other person, which is a funny story, I went to a conference September of that year, because now I made my own company. I started going to networking events, started going to conferences. I go to Vegas, and I see this guy at the airport. He's coming back to Jersey with me, and I'm in a suit. I'm coming home, and he's like, "So why are you all dressed up?" just have a conversation with the guy. I never met him before. And just explaining the business to him. He's like, wow, it sounds really interesting. He's like, take my number. When we get back, I'll message you. Maybe come to my office, we could talk a little bit more. So I go up there, I go to his house. He lives in Rockaway, New Jersey. He turns out to be like, you know those funny cars that do the drag racing? They do like the strip in like 5 seconds, 8 seconds, something crazy like that. That's what the guy does for a living. And I had no idea, but he's like, yeah, I'm on ESPN or whatever. And he's like, I want to do it. He's like, I want to invest. He put in $750,000. I met him at the airport. Just, he liked what he could tell I was passionate about what I was doing. I was knowledgeable about what I was doing. And he invested. So he became the owner of his own notes. I helped him work those out and everything. So yeah, pretty quick, we raised $2 million, and then I would go to these networking events, and I would start doing like webinars like these because you can grab a bigger audience, right? If you go to local events like in New York, New Jersey, only get New York, New Jersey. When I started doing webinars like this, maybe in 2015. I was getting people from Israel, I was getting people from Australia, I was getting people like all over the country, California, Colorado, Texas. So now when I needed to raise money again, or I needed to talk about something, I had a bigger reach. And then that led me to wanting to do the conferences, which in 2016, I started doing the conferences, and then Marty ended up speaking at the one in New Jersey. I know.
On a Sunday.
Yeah, you have the Sunday morning spot. So I know I kept trying to, I'm like, listen, I'm telling you, just come. And he finally came to the event. But those were marketing. That was marketing. Those events were marketing, and doing these kind of things were marketing. So then what would happen, I tried to figure out how I can differentiate myself from the competition. So in the note space, like I said, everything was cash. So let's just say the three of us were bidding on a tape, right? I got 100 grand, Marty got 100 grand, Max got 100 grand. We'd be competing against each other, driving the price up. So what I would do is I say, Marty, look, I'm going in on this trade, all right? Why don't you bid with me? We'll split the assets up. All right, good. Talk to Max, do the same thing. Now I took all the competition away from the big seller. Instead of us driving up the price, now I come in saying, I got 300 grand. We're not going to buy it at 25 cents. We're going to buy it at 18 cents. Why? Because there's no more competition. They're not getting any bites because we were not going to cut each other out. That's the kind of relationship we had when we were doing these trades. So that made it easier for me to raise money because we were all working together to drive the price down. And that would negate anyone trying to go around and try and take it for themselves.
So what kind of recognition were these investors looking for from you? Like, what did you have to show? What did you have to prove them for them to say, here's $750,000? Was it just that you were so passionate, or did they want to see anything?
Trying to think what I used to do. I used to just really thoroughly explain the business. I would try to show a track record, even if it was small, just different examples on a PowerPoint slide about the different scenarios and how you can get paid off in a situation. And then that was in the beginning. And then now that I closed a huge trade, that was now my newest thing. It's like, look, I just closed this trade, right? We bought it for this, it's gonna be this. So it kind of evolved over time. And then the more we would do these trades where we partnered together, the more it became like, all right, now I completed 2 multi-million-dollar trades, 3 multi-million-dollar trades. Who's now everybody wanted in, and I had to tell people that they couldn't be in. So I got to be in a good situation where I would listen. This is kind of how it would go, right? We would do a webinar like this, or like a Zoom call, like just investors, and say, listen, the trade, it's a $700,000 raise. I'm going to give you my attorney's escrow account information. The first people to fund the trade are in, up to 700,000. Everyone after 700,000, the money going to get sent back to you to be a backup. And the order of like the way that they would pick the assets was the order that the money hit the account. So they had an urgency to put the money in, and it was undecided by me. My attorney would just read it off to me. 259, I got this deposit. 301, I got this deposit. Whatever, and that determined the order. so that it took, and I would always take the last, pick whenever we split up assets. So that those two things, it made it impartial. It made it that I wanted the best interest for everybody, because if I'm taking last, then obviously I feel good about what we're going to buy, and I didn't determine the order, so it took favoritism out of the way.
Right.
Yeah.
And you found these people from your webinars and seminars and the marketing.
Yeah. Yeah.
That's awesome. That's awesome. So it's not what you know, it's whom you know, it sounds like.
It's a little bit of both.
Got it.
A little bit of both, because like, you know, you
These
gotta
are-
have the resources.
Got it. And these investors, they have to be accredited, I'm sure.
What was that?
They have to be accredited investors.
Yeah. These guys, they were all accredited. They were all, you know,
Right.
they were wealthy, they were married, they had stable positions in their companies, they were owners. Some of them were like, you know, some of them owned their businesses, some of them were just, you know, they had, you know, really good employment.
Right.
Yeah.
So now you're in the note space, and now I see, you know, obviously you built up a really nice size real estate portfolio.
Yeah.
How did that transition happen? What made you decide to buy the tangible asset?
Yeah. So that was going into 2016, asset prices were going up and up. And even though there were still note trades, they weren't as often. So that was, you know, at that point I'm thinking I got to reinvent myself, because if the asset prices keep going up and there's less trades, my scarcity thing on the seller is not working, because they flipped it on us. Now there's less trades. So now the competition gets more fierce to get those assets, and the only way to win is to bid up the price. And I'm thinking to myself, like, what am I going to do? I got to do something different. So the point of the notes was to get them performing so that you would get the residual, right? They'd be paying you for 15, 20 years, consistent payment, $300 a month, $500 a month, whatever it was. And then every once in a while they refinance, they pay you off in full. So it's like, what could do that? What could do that kind of same thing? And so I had no idea what I was looking at, zero. I'm like, I think like we gotta buy rental properties, like 3 and 4 family houses. Like each one's got to bring in at least $1,000 a month, and you get it for like 150,000, 200,000. You got to be making at least 1,000 a month. I didn't know what the hell the numbers were. And then, so 2016, I bought a 2-family in Irvington. I bought a 3-family in Irvington on 21st Street. So for those of you guys who know Irvington, 21st Street probably one of the worst blocks, right? I had no idea. But my attitude was, I'm going to figure it out, right? So I'm like naive. I go there. I'm like, oh, there's a school across the street. There's a school every 3 blocks. There's so many people. That wasn't a selling point. I thought that was a selling point. But there's a school across the street. It's going to be so easy to rent. And then I didn't know how to manage contractors. So those projects took like forever. I way over budget. I overbid the price. It was listed for 50,000. I bought it for 70 because I thought there was a competition to buy in Irvington. I had no idea. So I outbid myself by 20 grand. You know?
But you learn from it, experiences and education.
Exactly. And that's probably like out of everything, like I learned the most by doing. So like it's easy for me to like in the note business, I could be like, listen, these are good assets and this is here why, right? But I took my own money and people that I care about money and put it into it. And there was no failing, right? Like my attitude is always like, it's figuring it out or what? There is no other option. It's only figure it out. And it sucks sometimes. You got to grind and you have to fight through stuff, but that's the only option that I have in my head is I'm going to figure it out. Plain and simple. And so from 2016 to 2016, start picking up 3 families, staying away from the flips because we're trying to build up the residual. We're trying to build up the residual income similar to the note business with the reperforming note. Trying to build up the residual income. And unlike the note business, the real estate business, there are lenders. There's people who help you with buying these properties and renovating these properties. So that at that point, I didn't need any investors anymore. I started using my own money. Whatever I could do with my own money, which at the time I was only able to do those 2 deals. I was able to do the one on Lincoln Place and the one on 21st Street. I went to a hard money lender. I got killed on the terms initially because I had no experience. I think I paid 5 points and 12% was my first deal. I don't remember what the down payment was. It probably was like 20%. It was probably like something crazy like that. But that didn't scare me away. I know that's a lot of things that scares people away. If they start hearing, oh, the points and the down payment and this and that. You got to prove yourself. I remember trying to convince the lender at that time to give me the money for the loans, and I ended up being on the phone with them for about an hour, sweating, and I knew that this was like, if I didn't get this lender to believe in me, I was dead. I wasn't going to get those deals, and I started leveraging hard money. That's how I was able to get 21st Street. Then I went to 16th Ave, and then I went to Isabella, and then I went to 18th, and I just kept picking them up because I only needed a fraction of the money because the lender was going to help me with the rest, with the rehab and everything else. And then I would refinance out because I was buying these at like 60 cents on the dollar, 65 cents on the dollar, refinance out 75%. I'd make that whatever 5% spread on the deal. So maybe I refinance and make 10 grand here. I refinance and make 40 grand here. And then all of a sudden, now I had a decent amount of money where I can start buying more. I started doing one project at a time, I was doing 2, 3 at a time. That was because I leveraged hard money. I wasn't scared to pay some of the points because I was able to do so many more deals. And I think that's something that like people do get held up on.
Right. So on those first 2 deals that you bought, even though you outbid yourself and all that, did you end up coming out positive on that?
Eventually.
So what ended up happening? Did you have to just wait it out and kind of wait for that market to kind of catch up to where you bought it at?
Yeah. So that one on 21st Street, as an example, I think it only appraised at like 170. And I think so I bought it for 70. I put rehab at 75.
Okay.
So I was sunk in the deal, I don't know, 15, 20 at least.
Okay.
Lincoln Place, we bought it for similar numbers. I think it was like 70 and 80 for the rehab because it was a 2-family flip. So we put some different, we didn't even put that much different, but they told me to put different stuff. So that house, we ended up selling, we were trying to sell it for 210. The buyer bailed. The market appreciated a little bit. We ended up selling for like 235, that house. And so that one worked out. I think we made like, I think after all the holding costs and being on the over of the rehab, I think maybe we made 20, maybe 15 on that house. The other house, we were probably sunk in 15, 20. But that didn't discourage me because at 21st Street, I was getting $1,350, $1,450, and $1,450 on the rent. So I was bringing in almost $4,500 a month on I think it was $125,000 mortgage I got. I was making like $2,500, almost $3,000. I was clearing on that house.
So even if you couldn't sell it, you were still holding the property with a cash flow positive where it didn't affect you.
Yeah. My mortgage was like so cheap. I think it was like $1,500 or something. It was so cheap. And then I bought 16th Ave shortly after that, and I went $1,450, $1,250, and $1,000 on the rent. That one didn't clear as much, but it was still clearing almost $2,000 a month. So I said, listen, worst case is if we have sunk money, let's say you have 20 grand sunk in, but you're bringing in 2,500 a month. It's a pretty good return on your money. You make your money back in a year.
$30,000. Yeah.
Yeah. And
It's all about the numbers. It's all about the numbers.
Yeah, that's exactly what the numbers tell you everything. So
numbers don't lie.
No.
One is always one.
Are you continually doing flips today?
All right, so then I transitioned. So then I was doing all holds. And then like last year, going into this year, 2019 going to 2020, it was a little weird time. So I did like a flip in 2019. I did like a flip in 2018. And then the pandemic hit. I don't know what the hell to do. I was like, all right, let's just sit back and see what happens, right? And then everything's selling like crazy. Everything's selling like crazy. I don't know what the hell's going on. So I'm like, all right, it's time to do flips. I've done like 10 flips last year. I got 8 projects going on right now. like that are almost at the point of being listed. I'm selling some of my turnkey stuff that I have in Philadelphia because I started investing in Philadelphia in 2018. Yeah, it's been crazy. Now I transitioned to there's not that many hold opportunities. Now there's more flip opportunities. So that's the other thing with investing. You got to be adaptive. You got to be adapting with time. So I was in the note business and that changed. And now I was in the rental buy and hold business. And then that changed. And now I'm in the buy and flip business. You know, and we'll see what happens next. Maybe it's a downturn and now it's the time to go back into rentals again. Maybe it's the time to get back into notes. I don't know.
Absolutely. That's the real cool thing about real estate is that every couple of years you kind of see a new trend that you just have to kind of jump on board with and actually catch it before it even happens, really.
Mm-hmm.
The goal here. Here's a real good question from Montserrat. So he's asking first, how did you find your first couple of deals? Did you go hunting for them yourself, or how did that look like?
The first couple of deals were right on the MLS. 21st Street, Lincoln Place, Isabella, 16th Ave. I went right on the MLS and negotiated. I would tell the realtor, I'll let you get the dual listing and, you know, get my offer seen by the seller and then work it out from there. And then eventually
directly to the listing agent.
Huh?
You would go onto the MLS and just reach out directly to the listing agent.
Yep.
So were you a real estate agent at the time where you had that access?
My partner John was the agent.
So he was able to get you the access and you just showed that. So you were like browsing through it all day, or how long did it take you to find those?
It wasn't that hard. So I went to, you guys know ThinkTANK, obviously. I went to ThinkTANK's event. I used to like wait to get advice from him. Like he always had like these little nuggets. So I went on a Saturday. He's teaching about, you know, how to find deals or something, right? I forget what the topic was like originally, but he's like, just look for deals that have been sitting on the market for 120 days. Those will be motivated sellers. I went home. That was a Saturday. Monday, I called. Paul Washington was the agent. I called Paul and I seen Isabella was sitting on the market here at 165. I got it down to like 135. And the guy was motivated to sell. So I remember going to the house. There was like, I don't know, 10, 12 people, tattoos on their eyes. They weren't nice people. And I remember getting to the house and I'm like, my friend Muska was like, my partner, he's like, we gotta get the fuck out of here. I'm like, no, we already drove here. I'm seeing this house. I'm not turning back. So I go to the gate. The guy's like, what do you want? I'm like, I'm here to see the house. You live here? Like, just, you know, just being direct. And he's like, you ain't seeing the house. I'm like, I gotta see the house. So the girl comes out. She's like, why are you messing with that nice boy? Get out of here. And she lets me in the house, and I got to see her floor. I got to see the third floor. The second floor was locked. And I saw enough, and I got to see the basement. I saw enough that I was like, all right, we're gonna take this house. I was like, and I'll just talk to this lady. She seems pretty cool to get rid of these people who are hanging out in front of her house. And it was a little weird. It was a little creative, but it worked out.
Like you said, you got to be adaptable, and you can't walk away. You know, I've been to, you know, being in the real estate industry, I feel like you walk into a lot of these situations because don't forget, you know, most of the properties you wanting to purchase are going to be from someone who's motivated, right? There has to be a motivation behind it. And again, depending on where you are, everything's gonna be different, but there's always a funny story, you know, attached to it. And
so many. We're saying, wish that camera crew's following us all these years to see all the stupid stuff that we've done or we've seen. It's a setup.
If only HGTV would show the real side of real estate, right?
We had to do some crazy stuff. So one of our houses, Elijah sold us the house on 18th Street. It's a red house on the corner of 18th and 18th. And the Bloods love the house because it's a red house and it's a great pit stop, right? For someone to pick up and go. Another house where we weren't welcomed at first. Like we would walk to the house to try and get estimates and stuff, and the house was falling apart. So much garbage, it was horrible. Like everything had to be replaced in there. and we had to make friends with the Bloods. Otherwise, they would think we're the enemy, right? So Musco pretended to be in the mob because he's Italian, right? So he's like, you know, he kind of worked out a deal with him where it's like, oh, I got your back and you got my back kind of thing. Well, he's not in the mob, you know, but we had to do what we had to do so we can get the jobs done and they wouldn't mess with our house. So now if anyone did mess with the house, we knew exactly what happened and who it was, and they would take care of it for us. So it was, we went through a lot of crazy stuff, but it's all worth it. It's all been worth it. Like everything has taught me so much about, like, you know, how to deal with all these different situations.
Like
You know, one thing you said, which I like, by the way, is you got to be hungry, you got to be creative, you got to think of a way to make it work. You know, especially you drove out there and all that. You want to see everything about the house to see if it's going to be a worthwhile investment for you.
Yeah.
So part of this conversation is not to be intimidated by the growth, not be intimidated by investing in this industry in real estate. You know, you're going to get a lot of curveballs, whether it's, you know, disgruntled tenants, disgruntled owners of the houses. You got to do whatever you got to do to see if the deal works.
Yep.
So
You're always problem solving, always problem solving. And if
Problem
problem solving is not for you, then it's going to be hard to
One
work
of the
things out.
things, I'm sorry to interrupt. One of the things you said is look for a solution. Don't just get aggravated about it. Look for a solution to fix it, and so you could be successful.
Mm-hmm. Definitely.
So, I have a question for you. What I've noticed is that there's a lot of investors out there, right? Or I'll say new investors are getting into the industry. They listen in, they listen to webinars like this. They go on YouTube. They've gotten their knowledge. They've studied it for some time. They make their offer. They've done their numbers. The numbers look great. It makes sense for them. But then they get the contract that comes in via DocuSign, and they just stare at it for like an hour. Like, what was that like for you? Did you just sign it? You just say, all right, screw it, we're doing it. Let's go.
Yeah. I didn't even put in contingencies. I didn't even know what contingencies were when I first got those contracts. Let's go. Let's go. Oil tank. I don't even know what that is. Let's get this deal done. I wasn't worried about it. Everything that there's out there, you can solve the problem. You can 100% solve the problem. And if the deal really sucks, you lose the down payment or the earnest money deposit. I mean, maybe you lose $1,000 on the earnest money. That was. I've always been like, let me put my money where my mouth is. Let me put my money, and then I'll show everybody, and then, you know, then I can kind of dictate, or then I can tell people, oh, come with me while I'm doing this flip or this, you know, this deal or whatever. Like we were speaking earlier about JV partners. I didn't take on any JV partners until I proved enough that they were like chomping at the bit to now want to work with me. So then when I do have a deal, I shoot out a message to 2-3 people. I have the money if I need it. It's a different situation. I was also willing to cut myself a bad deal to get money, to raise money. Like I did in the note business, I'll take the last pick, right? Or if when I did that partnership, when I raised the 45,000, I made it equal equity. I didn't say I'm taking 50% equity because I'm doing all the work. I took whatever 9 divided by 100% was. That's what I took. So I was willing to eat it to prove myself so that I could dictate the terms in the future. A lot of people they don't want to give any equity away right now. You're not worth anything right now. You haven't done a deal yet. Prove yourself, and then you can dictate going forward how you want things to be after you prove your track record.
It's the supply and demand chain, right? You know, people forget, people want to invest their money, right? Rich people that have money need to put it out there. They need it to make money for them. Even if they're not rich, you know, people need their money to turn. They want to find someone like you that knows how to, you know, operate in this business and can turn their money for them. You're doing them a service, right? So you put yourself in a position of strength and demand, like, hey, you know, I actually have deals that come out with profits and I can show that to you. And now they're just, like you said, they're all chopping at your door now. And now all of a sudden it's not how to do a deal. It's how do I want to do the deal?
Yeah. Yep. Exactly.
And just to reiterate what you said, Mahir, to everybody out there, if you notice what he said, he went to one of Nick Tang's events. He listened to the advice that he gave him, and he went home and he just went to work with it. So stick with the plan, just do it. You know, are you going to make a mistake? Probably so. Are you going to learn from it? The smart ones will. And that's the way you're going to be successful in any business.
Yep.
So you can take all the advice, you can read all the books, but if you don't ever go in, you're never going to learn. You're never going to do it. You got to commit. You got to move forward. And unfortunately, due to this pandemic, pre-foreclosures, foreclosures, short sales, tax liens, probates, they're going to be out there. Once these the courts open up, and once these moratoriums are finished or are done with already, there's unfortunately going to be a lot of deals to be had. What would you say now about these investors going in for 2021? There is no perfect deal, but should they wait for that good deal, or should they just go in with a deal that's small, learn it, and then go on to the next big one? What are your thoughts on that?
Yeah, my thing is just go get the experience. So even if you do a flip and it's a break even, you have a deal under your belt now. At the minimum, you look better to a hard money lender the next time because you've already done a deal. Now you get to 5 deals. Now you're getting better pricing on the hard money deals, on the hard money lender. At least in the eyes of the lender, you're already looking better. And in the eyes of the people that are watching you, they don't all know that you made $0 or maybe you only made 15,000. All they're seeing is that you're in the real estate space, right? As long as you're taking care of, if someone's partnering with you on the deal and they're not losing, or you're protecting them, you're getting the experience. There's a reason I used to do these Facebook Lives. I used to do these Instagram stories where I walk to the property and quickly show a quick snapshot. And then right after, I get private message. Oh man, that's awesome. How do I get involved? Oh, what are you up to next? How do I get involved in the next project? If you're not showing what you're doing and you're just waiting for the perfect deal so you can make $100 grand on the first deal, you're gonna be waiting forever. You're gonna be waiting forever. My first deal, I outbid myself by 20 grand. And then the other deal, I made like $15,000 after like a year of brutal torture to get the job done. Like, that's not like a sexy deal, but no one knows I went through that except for me. And I survived it, right? So now I have a battle, I have this story I could tell about how the contractor didn't know what he was doing. I had to deal with the city. I had break-ins and people stealing copper pipes. I had this and that, and I still got the deal done. I still protected everybody. I paid my lender back. And I got out of the deal. Worst case, that's what you have.
These tough situations don't just make you better; they make you even better, as I like to say, because now you found solutions to something that not every day, may not be an everyday problem, may not be something that you have to do every day, but now you know to watch out for it, to be careful about it, how the city works now, what they want to see. Mm-hmm. These are all little details that make all the difference, right? Timing is a really big thing in our industry. The faster you're in and out, the faster you get to the contract, the faster you get to the seller, everything is time, right? Mm-hmm. So it's all about making those small and smart decisions. The way I like to always compare it is to like working out, right? You want to get skinny, you want to get fit, it's only 6 months away. It's either 6 months away from today if you start today, or 6 away from tomorrow if you start tomorrow. So you might as well just start today.
Yeah.
It's that simple.
That's funny. So I also have a pizzeria also, right? I've tried and failed a lot of times. I had a pizzeria and it didn't work out. It's okay to try something and it not be successful. So if you try to be a wholesaler and you're not good at that, figure out a different way to be in the space. If you can't buy turnkey, whatever it is that you're trying to, just try it a different way. You'll find one that fits you. I wasn't a pizza guy. It didn't work for me.
How about the folks out there who, want to keep their job, they can't afford to lose their job, and they want to do a flip? So, they're not going to be able to monitor the deal so much. What do you recommend for those investors?
They got to partner with an operator, right? There's, for me, when I was getting started, I would love to partner with someone who could put up the money and I run the deal. I'll get the loan done, I'll get everything and bring them back a finished product. And I still do that for some people, right? Find somebody who's an operator, and you could be the operator, but you have to do a deal to become an operator, because you're not going to learn how the city works by only doing YouTube videos. You're not going to learn how to deal with interpersonal stuff with the contractor, because everybody has a different personality. Some people I had to yell at to get them to perform. Other people I had to kind of joke around and be friendly with them to get them to perform. Other people, you just got to fire them. Well, you can't learn that you have to go operate. You have to go to work and partner with somebody who could do that, or you become that.
Yep.
You're not failing. You're not trying hard enough.
So I failed plenty of times.
So I'm telling my clients, by the way, when I'm on the phone with them, they're saying, "Oh, the prices are high. The prices are high." But one of the things I'm mentioning is that the ARVs are growing higher, getting
Mhm.
higher, and the
Mhm.
profits are getting higher because there's such a demand for 1 to 4s.
Mhm.
Rates are low. People are moving for a lot of different emotional reasons. They want to be moving to suburban area or next to their children. They want to have a larger space in their home now because they're working from home,
Mhm.
and the time on the market of these properties also is 1 to 2 months, I believe, right? 30 to 60 days. That's a very good sign. So if the ARV, if the price is 10, 20,000 higher, the ARV is only going to be 10, $20,000 higher. What are your thoughts on that?
Yeah, see, this is how I look at it, right? If it's a big rehab meaning like 80, 90,000, something 70,000, where there's a lot of stuff to take care of, I would try and stick closer to the numbers. You want to be 65, 70 cents on the dollar. But if you're looking at something light rehab, you change the tiles in the bathroom, you change the cabinets, you paint, you throw down new floors, cosmetic rehab, I'll go to 75 cents, no problem. I'll go to 77 cents, no problem. Why? So I'm going to get in and out of that job in 6 weeks, 2 months max, and the house is going to stay on the on the market for a weekend. So, yeah, okay, you paid 70 cents on the dollar, right? But you didn't pay 9 months of interest on that deal. You paid 2 months of interest, and now you're on the market already, about to exit the deal. So that's the way I look at that.
Not only that, but you get your capital back in what, 3, 4 months, where you're able to turn it around again into your next deal, which maybe
Yep,
at 65 cents on the dollar instead.
yep, yep. Like, I had 2 properties we just listed. 133 South 11th, we listed the last weekend. It went into contract after one open house. 43 West 33rd in Bayonne, listed it just this past weekend. We're already under contract today. So, like Marty said, their houses are not sitting. They're not sitting. All you have to do is make them aesthetically pleasing, and they will go under contract. Price them right, they'll go under contract.
So price them right. That's the key point right there. So let me ask you this: when you're pricing your properties, are you trying to maximize your profits, or are you trying to sell that property as quickly as possible?
I'm trying to sell it as quickly as possible. That's the first thing. Because I could want, like, all right, so this house in Bayonne, right? The realtor suggested listing at $599. What we wanted was $625. But $625 as appealing as $599, is that really going to draw the eyes? Probably not.
Right.
We end up getting an offer at $655. We may not have got that offer if it was already at $625. All right. The point is, it's supposed to hit the market and go on the contract in the first 30 days. If you don't get a contract in the first 30 days, your price was wrong. And I always tell the realtor, give me the real price. Don't give me the price I want to hear. Give me the real price. What's the price that's going to put this house under contract in 30 days or less? That's all I ask of my realtors. If you're going to list it, give me the real price. Don't lie to me, because you're only going to look. It's only going to come back on you when it doesn't sell in 30 days. I'm going to come after them saying, well, why did you advise me to tell me this? You know?
And when was the last,
That's their job.
when was the last time you listed a property low and you got a low offer on it?
Like a lower offer?
If you price it low, it's not going to happen because you're driving so much traffic.
Yeah, it hasn't happened.
Exactly. So don't be afraid to price your properties right. Don't be afraid even to go a little bit lower than right, because you're only going to build the supply and demand chain, which is, I have something that's lower than market value. Everyone's going to want to make their offer. The more offers you get, the better off you are. We're going to open up for another, a couple minutes of question and answer. If anyone else has anything, please put it in the question and answer box below. We'll give about a couple minutes.
Yeah, I got like 5 minutes.
Okay. So in the meantime, while we wait for anybody to hear, is there any other any advice that you would give extra to somebody that's maybe on the fence right now? They want to get involved. Any last words that you might be able to give them?
I would say if you have very little to risk, take chances, because you have to bet on yourself at a certain point. If you're not willing to bet on yourself, then don't take the chance. But I was willing to bet on myself, and you need that confidence in yourself to be able to get to where you're trying to get to, right? Because you want to work. You're trying to do this for a reason. If you're working a 9 to 5 job, you should be looking at these webinars as a chance to talk to these operators like myself, Max, Marty, and figure out, how do I get to work with them? How do I fit in? And it's not by coffee or lunch. It's if you have a deal, can I JV with you? If it's whatever it is, if it's, can I be a lender on a deal? Can I some way fit your way into the deal where you can add something, add a value, because you don't have the time to add value. And you saying you want to learn, I want to learn the business, it's not a selling point. You need to add a value somewhere.
Absolutely. Mahir, we appreciate you being here and being so detailed and really going into it, because it's super helpful, especially like, yourself, you've been new at some point, you made your mistakes. Every year, we're going to get some new people. They're going to bring in some new energy to our industry and build our community even bigger. So thank you so much for sharing your story, sharing your information with all of us. We really do appreciate it. If anyone is interested in getting more involved in buying real estate and they need a lender behind them, please reach out to myself, Marty. You could reach out to us at 718-285-0806 at Express Capital Financing. We're on every social media you could find out there as well. Just search up Express Capital Financing. And until next time, I'll see you guys.
All right.
Thank
Thanks,
you.
guys.
Thank you. Thank you.